Hi everyone, in today's video I'm going to be continuing my retirement savings options series with a focus on individual retirement accounts or IRAs. Hi everyone, I'm Star Tower, your financial fitness coach, here to empower you to become financially healthy and to live the life and retirement that you and your family deserve. Welcome to Wealthy Wednesdays, where I talk about concepts related to long-term wealth management and planning. So in today's video, I'm going to be going deep diving into individual retirement accounts as retirement savings options. Just a quick disclaimer, I'm not a tax advisor or accountant, so if you have questions around those areas, please reach out to your tax advisor or accountant. And if you're looking for one, I do have recommendations, so feel free to reach out to me. So in a previous video, I talked about the 401k as a retirement savings option, and today I'm going to be focusing on the individual retirement accounts or IRAs as a continuation of that series. So basically, IRAs are another way that you can squirrel away your retirement savings in addition to the 401k. And so if you're working for a company and you have a W-2 and you've already kind of maxed out your 401k and you want to continue to add towards your retirement savings, the IRA would be another way to do it. The IRA is also available for those who are self-employed, who have a 1099 or freelancers, for example. And so they can also use IRA to build towards the retirement savings. So basically there's two types of popular IRAs, the traditional and the Roth, and I'll go into some of the differences between the two. So back in the days, I used to personally get confused between the two, so I wanted to explain it in such a way that you would understand the differences and determine which one is the best fit for you. So the main things to keep in mind is that the differences are basically the tax benefits that each IRA account offers, as well as the eligibility rules around your income that allows you to determine whether you can actually contribute towards a Roth or a traditional IRA. So here I put together a table that gives a side-by-side comparison of the features between a Roth and traditional IRA. So here with the Roth IRA, it's based on post-tax contributions, meaning you've already been taxing your income and that income is then put towards the Roth. So what this means is when you take out withdrawals at a later point in time, they will be tax-free because you've already been taxed on that contribution. And this is recommended for people who think they're going to be in a higher tax bracket after retirement because it's already been taxed, right? It's already been taxed at this current point, meaning that it won't be taxed again. So if you are in a higher tax bracket after retirement, that won't affect you because you've already paid taxes on this contribution. Whereas with a traditional IRA, that's based on pre-tax contributions, meaning that your income hasn't been taxed yet and you're putting that income towards the traditional IRA. So what this means, it's going to be tax deferred and you won't incur taxes until you withdraw it at a later point in time. And this is ideal for people who think they're going to be at the same or lower level of tax bracket after retirement. So if you think you're going to be paying less taxes because you're not generating as much income during your retirement years, this is really ideal because you're not going to be paying as much taxes on these contributions as you would be paying them now at this current point in time. So with the Roth IRA, there is an eligibility requirement based on your modified adjusted gross income. So that kind of depends on what amount of income you're making, and that determines how much you're able to put into that Roth 401k or whether you're able to contribute at all. So here I've kind of put together a table that looks at the income levels that you need to have in order to contribute to your Roth IRA. So if you're single or a head of household and you're making less than $146,000, you're able to contribute the full amount. If you're making $146K and less than $161K, there's kind of a phasing contribution based on that spectrum, right? So wherever you're falling on that spectrum, you're able to contribute a part of that $7,000 or $8,000 if you're 50 years or older. And that's kind of based on a bit of a complicated calculation. So if you're making more than or equal to $161,000, you're not eligible to put anything towards the Roth IRA at all. For those of you who are married and filing taxes jointly, you're able to make the full amount of Roth contribution if you're making less than $230,000. If you're making $230,000 but less than $240,000, you're able to do that phasing contribution that I just talked about. And if you're making $240,000 or more, you're not eligible to put anything towards the Roth IRA that year. And for those of you who are married filing taxes separately, if you make less than $10,000, you're able to put in the full amount, full maximum contribution towards your Roth IRA. So the good thing about the traditional IRA is that there are no eligibility rules regarding your income. So it doesn't matter how much income you're making, you can still put the maximum contribution towards your traditional IRA. So in terms of mandatory withdrawals, with a traditional IRA, you have to have a required minimum distribution when you turn 73, meaning that you can't keep your money in the traditional IRA account forever, but you have to start withdrawing starting at age 73. But with the Roth IRA, there are no mandatory withdrawals, so you can keep that in there for quite a long time. And in terms of penalties incurred, both the Roth and traditional IRAs will incur a 10% penalty if you withdraw your contributions before you turn 59 and a half years. However, with the Roth IRA, if you end up withdrawing contributions after 5 years, after 5 years of keeping that account, you won't incur any penalties. And with the traditional, you'll incur taxes along with your withdrawal, because the traditional IRA was tax deferred, meaning that you didn't pay taxes on it before. So now you're going to pay taxes on it when you withdraw. I also want to note that you can also put contributions towards both a traditional and a Roth IRA. So let's say, for example, you're phased out. You're kind of doing a phased contribution, or you can only contribute a certain amount towards your Roth IRA. You want to be able to contribute the max amount that year, so you can put the rest of that max contribution towards traditional IRA, and that's totally fine. However, the aggregate of both IRAs cannot be more than 7,000 or 8,000 if you are 50 years or older. And so I also want to talk about rollover IRAs. And in a previous video, I had talked about kind of rolling over your 401k when you leave a company. When you do that, you can roll over your 401k into a traditional IRA. And in that case, there's no contribution limit, because you already, it's basically an IRA where you're rolling an existing retirement account that you have over into the IRA. So there's no maximum contribution limit. So if you have like $10,000 or $30,000 in your 401k, then you can roll over that entire amount into a traditional IRA. So now that you've decided you want to have an IRA account, how do you go about doing that? So basically, there's different ways. You can go to a financial institution, a bank, a stockbroker, a life insurance company, and they can help you open an IRA account. They're going to ask you for information like your social security, your date of birth, identification, how much you want to contribute to the IRA, where you want to take the funds from, etc. Especially if you have a 401k, you can tell them that you have a 401k and you just kind of want to roll over. But if you're starting a whole new IRA account, you might want to just let them know that you want to roll it over, let's say from your existing brokerage accounts or your bank, right? So then, once you provide that information, the account is opened up, and then you basically kind of input your goals, like what you're looking to do with that retirement account, how soon you're looking to retire, and that basically helps you determine the types of investments you want to make. And you can either, kind of talk with a financial advisor about, which investments to put that in, or a robo-advisor. So if you need help on opening an IRA account or even investments within your IRA account, please feel free to DM me and my contact information below, and we can set up a complimentary discovery call to see how we can further work together. Also happy to recommend some great financial advisors on my team that you can work with as well. So I'm going to continue my video series on retirement savings options. I'm going to go over other IRA options for small businesses as well as those who are self-employed, and also annuities in a future video. So make sure you subscribe so you don't miss out on this content, and please feel free to share my channel with anyone who might find this content useful as well. So thank you for watching my video, and keep taking those small steps to becoming financially healthy. Until next time, be good to yourself, and I will see you in my next video.